In this weekend's video, I've titled it Why Stocks Are Still Favored in 2025. This is the Viper Report Market Wrap video for the week ending November 29th, another month over, and that's when I usually review the monthly charts and technical studies. You can see here we have a chart of the NYSE Composite, a monthly chart. It completed a triangle formation at the end of 23, and you can see it's been a pretty good month. We had a sharp setback here in September, but it didn't last very long, and we closed higher. And of course, this month, the NYSE Composite was up 5.4%, pretty good performance. As we get closer to the new year, one of the questions I'm always asked is, what should I do for 2025? We'll get into what I think stocks are going to do, at least for the first part of 2025, but also I think it's important for you to review what you did in 2024. So I would suggest you go through your portfolio and note the good decisions you made as well as the bad decisions. And I think that's a great teaching tool. I've done that for clients over the years, and I think if you'll find that your performance wasn't quite what you would like, you'll probably find you had a couple of dogs you held on to that if you'd stopped it out, a 5% loss, instead of now it's a 12% loss or something, those are what kill a portfolio performance. So I think you need to get instructed in technical analysis, be my bias, of course, and learn how to place stops. Where's a good place to stop? Determine your entry levels. And build a plan for how you're going to get better in 2025. From this chart, you can see that the NYSE stocks only AD line broke out at the start of 2024 and has been in a very strong uptrend ever since then, making a new high in November, as did the NYSE all AD line, also made another new high. If we break this down and look how this started in late 83, I think you'll find some interesting conclusions. This chart is part of the contribution to Forbes.com that's just up online. Once again, if you want to find my articles, you can go to Forbes, Tom Asprey on Google or a search engine, and you'll get this whole list. Why might this be helpful? Well, just like it's been for the start of 24 and the start of 23 for that matter, lots of articles about why you should not be in stocks. That's been one of my pet peeves. You remember, we had to have a recession because of the yield curve, and then, no way growth stocks were going to come back after getting smacked in 22, etc., etc., etc. So I always suggest that if you're starting to follow somebody, you go back in to say, well, what did they do at such and such? So, my stuff is up online to 2011. Not all the charts are, but anyway, this is the latest article, Why Stocks Are Still Favored in 2025. Of course, the basis for my approach is based on the advanced decline lines in terms of what the major, minor, and secondary trend is for the market. And, of course, the monthly is a key. We really didn't have any monthly signs of a top in 2022. We did, of course, in 2007, 2008. Okay, so this chart shows you this flag formation we've completed. And if we look down here, and actually it's a month-to-month basis, but you can see that at the end of 23, we were testing the breakout levels in the AD lines. They were above their moving averages. You remember pretty much, if you look at the S&P forecast at the start of 24, nobody was looking for much. There were a lot of positive outlooks. And, look what happened. As of the end of January, they all broke out, right? So they're very strong. If they're making a new high here and in a positive trend on the monthly basis, that tells you have time, before something serious is going to happen. And that's my conclusion with how we stand now. So if we go through it a little bit more, you can see, a very nice positive uptrend in the AD lines, and a pullback there, and then back to here's how we closed in November. sharply higher, and be watching the Stark bands here, but shows no signs of a major top despite the gloom and doom you read. So, study the data, and if you find out you've been following someone who's hasn't been great on the market in the past couple of years, find somebody else. If you look at this SPY weekly basis, you can see it closed very strong here, another new high, and with the Stark bands, on the upside around 613, we closed at 602, so that's sort of a near a potential target, maybe even by the end of the year. You can see the AD lines right in here. We had a little sideways action and a slight divergence, but we never started a new downtrend, and of course they've all surged to new highs across the board. So that's a very strong signal, that what you typically see when you see a major correction, like some people are comparing that now we're looking the same as we did heading into 2022. Well, you can see we have lower highs here in the AD lines, particularly the NYSE. S&P held up a little bit better, but that's why you look at the weight of the evidence is quite important. If you look at the weekly chart of the QQQs, still looks great. It never had that problem. Pushed to another new high, in the summer, and pretty people were saying, oh, watch out for September. It's still looking gangbusters. So, before it tops, it needs to break decisively below its moving average, and the moving average needs to flatten out and decline. Typically the timelines on worst case scenario, it would probably take 2 to 3 months at least before that could happen. Relative performance, is still range bound, dropped back below its moving average, because value picked up some over growth last week. So, it looks like they're both value and growth are going to hand off leadership week to week or day to day even. If we drill down to the daily charts, you can see we had this nice little, slight divergence here, in between the October and the early November high, higher highs in price, not in the AD lines. Well, that's now been taken care of, and we've broken out back to a new high here. AD line still looks strong. Put call ratios low. Our entry point, we were looking for this to be a buying opportunity. And when those, we got back to the 20 period EMA and the 50-day. When that happens and the put call ratios are high, that means most people are bearish and buying puts. That's when you want to be buying. And, we have the VIX down here. No signs of trouble yet from the VIX. It's still in a downtrend. We were watching that right here, came up to this resistance line D, but failed. I still like the QQQ. The trading longs were established for it right around in here, and I'm holding on to them. I keep raising the stop for traders, but I think we're going to make it above this 515 level. 520 is a near-term target, but nice strong close on Friday. Look at the AD line. That's when everyone was looking at become bearish, in October and early November. All you had to do was see this. You're making higher lows, higher highs. That's not the sign of a top. In terms of relative strength, it's still not acting a lot stronger than the SPY. You can see, it's not like it was in May through the July high, or as weak as it was between the July high and the September lows when value was leading. We haven't shown this chart for a while because I find that basically the advanced decline numbers are more accurate. But here we have the percent of stocks above the 20-day moving average of the S&P 500, the 50-day moving average, and the 200 moving average. So, in September and October, there were some that were looking like, oh no, we formed a divergence here, and that was a bearish sign, and it is if it agrees with the AD line. It didn't agree with the AD line. which was looking much stronger. Same sort of thing here. So basically, it got down into below 40, below 50 here. That were indicated the market was nicely oversold and would provide fuel for a rally. Above the 200, it's still rising. It's if it gets up to 80, that'd be more of a problem because that's where the last failed. But still, no signs of worry here, and the AD line I think will tell you first. High-low analysis, still okay. Sharp spike here, so it didn't make a new high here, but that's that could happen before the end of the year. And more importantly, no warning sign from the new lows as they have dropped back down this week. The high-low analysis on the Nasdaq Composite does not look quite as strong. It peaked in early November, lower high here, 233 versus 600. For now, if it has to get above this 300 new highs to really, or 300 new lows rather, to give us a strong warning system. But the fact that we did spike here, is something to pay attention to. It could mean a little more than that 1 to 2 day pullback, that we've basically seen, for most of the time in the last half of the year. Small caps had a good run. It was not as strong last week as some of the other major averages, but still higher. Looked like it formed a doji this week, so that'll bear some watching. Still have targets around 134 to 140, and do not see a lot of people jumping on the small cap bandwagon yet. But if they do, that'd be a sign for traders maybe to take some profits. Not much clarity again this week from the growth versus value weekly ratio. So we have about an equal, maybe a slight balance towards growth in the ETF portfolio. We drop back down to the 20-period EMA. So now you have the two levels we're really watching now on the downside at 193 and then up here. So the moving average is slightly rising. MACD HIS and MACD lines have barely crossed. So those of you taking some of my classes in MACD and MACD HIS analysis, which frankly, if you go by what people say in the web, it's almost totally wrong. But this is not necessarily bearish. So next week's action will be important. I hope some of you saw the article on interest rates that I did last week. The 10-year T-note yield. Last week's article in the bond market, also on Forbes, I discussed, the divergence here in the MACD histogram. I developed this from Jerry Appel's great MACD, which you're probably all familiar with, back in the mid-'80s after I retired becoming a biochemist. And you can see, we made a series, the histogram picked here. So you don't, it starts to decline, you wait for some other signals. So we were getting those, last week, and we can see what happened here as the article went. It was like a 4.3988 yield. Now here's the current chart. You can see that that came out on Tuesday, I guess, and man, it yields fell sharply, completing and confirming this divergence here. You also notice that the lows in September, we got good positive signals. So, MACDs, if I don't have volume data, are one of my favorite indicators, but you have to be very careful and understand what you're looking at. Sometimes, like right in here in July and August, you have to go with what the trend is based on things like the 20-period EMA. So right now, this is just starting to decline. We're by the Stark band. So would not be surprised to see a bounce back in yields, but now it needs a lot of work for the daily analysis to flip back in favor of higher yields. So that should be another plus for stocks for the rest of the year. And I've already taken too much of your time, but a quick look at the ETF reports were sent out this weekend. You can see, that this is a chart of the triple leveraged short, and it's still in a clear downtrend. and no signs yet of a bottom there. 71% of the ETFs are above their quarterly pivots. Lots of new buy signals on a weekly basis. VAW, which is the Vanguard Materials, XLP, XLRE, VNQ, which is a REIT, real estate, home builders, and home builders on there twice. XHB is home building related companies, and junk bonds. Growth 90% above, value 80%. And if we go to our percentage, the main positives were that financials still screaming, up to 100% here. They're by far the most positive. Some improvement here from XLI, that's the industrials. They've been 50-50, 67, now 75. 75 also for XLY, where we're long. XLP, still low at 41.7, and XLV even worse at 25. So some interesting improvement in the REITs here, as we know there are buy signals in VNQ and XLRE. So now we moved back above 50% in this analysis. Last week, 4 ETFs were up around 2% or more. XLV, XLRE. Remember, XLV still looks negative, so this looks like a bounce within a downtrend until we see more evidence. XLY, we're long. XLU, XLP, and we're all up more than the SPY, which was up 1.18%. And the XLK was only up 0.6%, so it was pretty flat. In terms of new signals here, the weekly I mentioned before, XLP and XLRE. The iWeek Daily, that's the Asprey relative performance that Jerry created. Some new green here. That just indicates that all the ones that have that green are now starting to outperform the S&P on a daily basis. Only VBK, which is our small cap pick, it's above the Stark band here, so it's getting a bit extended on the upside. Here's our current, or most of our current ETF holdings. A couple we didn't have enough space that limits you at 12, and for our new students just starting off, I often go back to what caused us to recommend any one of these. Whether it's KRE, KBE, or XLF. Going back into the fall, what the technical signs were that convinced me they were going to move higher. And that's often very helpful because, in my view, that by repetitively watching the charts and analyzing them and drawing your conclusions, your pick of winners versus losers, or the percentage, is going to increase. Let's take a quick look at the sector report before we call it a weekend. New format changes. Your subscribers are getting 2 or 3 isolated reports. They'll have whether ETF subscribers currently get the ETF and the sector report. Stock traders get the sector and the theme report. That'll probably change at the end of the year. In any case, have the same sort of format here, except we have these nice RS charts, thanks to Jerry and the crew. So you can see the fast, has pulled back, the fast RS analysis, into the slower one right here, and it just crossed below it. So, what does that mean? That typically makes this coming week's action important. It's not one of the ones that had a strong trend most of the year, unlike materials we talked about, and I think in September, it started topping out here and still looks negative. Industrials, looked like it was consolidating, it broke back out, so that still looks to be a winner going forward. Consumer discretionary, also nice positive signal that we gave back in here. We got a little too cautious, but still long partially in that. Consumer staples, a well-established downtrend. Healthcare, same thing. Okay. Financials, gangbusters. We got in the banks as well as XLF in here. Technology, a bit of a chop in here, so never a good sign when the fast is below the slow and the slow is declining. So, we'll be watching the technology positions and see if we need to adjust accordingly. XLC still looks great. Utilities are improving, it looks like. So you look over here, Duke, AEP both gave new weekly buy signals, and the 3-day are already, positive. So, EXC and ED might see some positive 3DTS this week. That might be something to work on. XLRE, we had some really great trades. It's, July through September, and you can see, it's starting to look like it's turning around a little bit. PSA, and, now we're looking at some of these other REITs that, we'll be looking for new 3DTS signals in the week ahead. In the themes report, the NQ largest, Apple just gave a weekly DTS. Broadcom, Google, and Microsoft. Microsoft has turned pretty much green here, so that's something to look at. NVIDIA, is trying, still needs to, be looking for 4-hour and DTS this week to suggest that pullback is over. Meta, sort of a mixed bag, and for the Dow, no new greens really. Microsoft, you can see the same sort of problem, and McDonald's, Amgen, flipped negative at the end of the day. And then Jerry also created an AI mix, which is sort of a new grouping, and it's something to watch. Pretty strong stuff here, so there might be some symbols you're not necessarily familiar with, but looks like you maybe should become familiar with them. So we're scheduled to put some new articles up on the Viper Report on Monday. Also, if you want to take advantage of the year-end special in the Advanced Decline Line course, you can go there and say Build Your Investing Future. It's a pretty in-depth, one-on-one class with me. After each class, I'll send you some homework, and then the start of the next class, we review that, because my goal, like it was when I was teaching biochemistry, is to be sure you understand it. So we go at a pace that, you have to pass hurdles, from me that will help you learn and help you assimilate and put it into practice. And, this is a year-end offer. If you want to take the course in January, February, you can still take advantage of the pricing by buying before the end of the year. So you can see some examples here, and or look back in the Forb archives. So great. Hope you have had a wonderful Thanksgiving with family and friends, and look forward to a good December